So now, at that time, no one justified. Me I try to submit it back and it has been
Myself, veg, this. I want to veg.
Jump.
This kind of agenda, folks. Now, regarding so we have look at the fixed assets first. So the basic balance sheet as at December 31, 2005. So you have fixed assets first, then you have current assets, then you have liabilities, and then you have capital. Now, it's something named cash introduced right here. This is having your original capital figure of $20,000 in your original trial balance, right? And then now, you'd have the 8,000, the 8,000 of net profit for the year, and you get 28,000, you subtract the drawings of 7,000, you get 21,000, right? That's how you do a balance sheet, good? So this is the original capital in your trial balance, then you will add net profit, then you want less drawings, all right? Now, there are 4 categories of entries shown in this balance sheet. In practice, the fifth long-term liabilities often appears, which is right here. Often appears, right? It is positioned after the current liabilities, and its total appears as a deduction under the figure, depicting the difference between the totals of the fixed and current assets and the current liabilities. Again, there are 4 categories of entries shown in this balance sheet. So you have 1, 2, 3, 4. However, you also have long-term liabilities as well. Now, the fifth, which is long-term liabilities, often appears. It is positioned after the current liabilities, right? And its total appears as a deduction under the figure, depicting the difference between what? The totals of the fixed and current assets and current liabilities, all right? Exhibit 8.4 shows where this would be if BC had any long-term liabilities. Let's look at it now. The figure for each item within each category should be shown, and the total for the category produced. An example of this is the 25 plus 100 total of the current assets. All right. The figure for each asset is listed, and the total is what? Shown below them. The total for the current liabilities is subtracted from the total for the current assets. And the net figure is then placed under the figure for fixed assets, as you can see. All right. See there? You subtract current from current assets, and the figure is placed under the what? Fixed assets. All right. The total for this net figure is an important one in accounting. It is known as what? Net current assets are working capital, and it shows the amount of resources the business has in a form that is readily convertible into cash. You do not right there after each item, you know this, right? Do not this. The owners will be most interested in their capital, and the reasons why it has changed during the period to show only the final balance of 21,000 means that the owners will not know how it was calculated. So we show the full details of the capital account, right? Look at the date on the balance sheet. Now compared with the dates put on top of the trading and profit and loss account in the last chapter. The balance sheet is a position statement. It is shown as being at a point in time that is as at December 2005. As at the trading and profit and loss account is different. It's for a period of time, in this case for a whole year. And so it uses the phrase for the year end, ended December 31, 2005. So this is the explanation as to the reason why we have to use as at for the balance sheet and for the year ended for what? Trading profit and loss account. All right. Now this will show you the portion of long-term liabilities, right? Now in this case, long-term liabilities is what? 0. So the long-term liabilities will come at a deduction under what? The net under the fixed and current assets and liabilities, right? See there? That's where it should be. So you can take a snapshot of this balance sheet now, so you can know where long-term liabilities would really be. We take a snapshot of this, All right, take a snapshot of something. A snapshot. When you're watching the video again, you can write it down. If I were you, write it down now, please. Everybody have this, by the way, you write it down yet? You're writing here, take a snapshot, show them. Somebody. Hello? Have you took a
Yes, sir.
snapshot
Yes.
of this diagram?
Yes.
All right, thanks. All right, let's go. So we'll look at a question now. All right, so look at this one. So you must complete question 7.1 by drawing up a balance sheet as of December 31, 2005. All right. Sorry, as of December 31, 2006. Let's go back to it. We did it last class. So we're gonna go back to it again now. Man, see that thing. See that never see it. All right, we're gonna do exercise 8.5 to see how we get this done. All right. Now, so we'll do exercise 8.5 together now. All right. Should I do this one? All right. 8.5. What do I do now? I wonder if I did this to you. See. This to you. You can see clear. You can see that oopsie. I'm very fortunate. I found the exercise that we did the last class. So I'm going to bring it up on the screen now. All right, last class, we did this last class, remember? Got it now. We did this last class and this came from exercise 7.1. Let's go back to it. Exercise 7.1 was this one. See there about AMO, right? So what we did last class, we did the trading and profit and loss account, right? If you remember, now we're going to do the balance sheet for this now. Good? All right, let's look at how we do it, how we approach it now. All right. So let's go back here. So, and then I share this one now with you. All right. So therefore, this would have been our trading profit and loss account. So trading and profit and loss. Otherwise called right the income statement instead. There income statement. And then we look at we're going to do our balance sheet now. Right. So we're gonna go back to the question sheet for 7.1 and check what we have here. So we're gonna do the balance sheet for 7.1. Now, what are the fixed assets here based on what you have seen a while ago? Anybody, please?
Insurance.
No, man. That would be, look good, man. Look good, bossy. Insurance expense, man.
Sir, general expenses.
Go ahead, we're not here, huh?
Motor
General
vehicle.
expenses.
Motor vehicle and what? Look good. Motor vehicle and what?
Premises.
Yes, premises. So those are your fixed assets, right? Yes. What are your current assets in this case? What are your current assets?
Cash in hand.
Yes, what else?
Cash at bank.
Yes, what else?
Cash at bank.
What else?
Sir, rent.
No, it's part of the expense.
Oh.
Creditors.
No, sir. So you have cash at bank, cash in hand. You have two more left there. Anyways.
Salaries.
No, sir, expense.
Sir, drawings.
Sir,
Drawings and capital.
Huh?
Drawings and capital.
No, man, it's all right. What's somewhere? So what's somewhere, you know? Somebody sit a while. Huh?
Drawings and capital.
No. That going on balance sheet, yes, but it's not a current asset. Drawings and capital going in the balance sheet, of course, but it's not a current asset. So you have
expenses.
debtors. This one right here, so you have debtors, cash at bank, cash in, and also the closing stock. All those are the current assets, right? Good. Now, under your liabilities now, you'd have what? Creditors, which is your current liability in this case. All right? So let's go. So the first thing that we start in this case now is your title. And the title will be A more you write balance sheet as at December December 2006. What I normally do is put in two columns. So you have 1 year, another sign, 1 year, another sign. Then now first you would have what? Your fixed assets, otherwise called non-current assets, all right? And they are first start with premises first, because premises is the one that is has to be turned into cash. Then you put in your what? Motor vehicles, right? So therefore now, so put in motor vehicles. And we put in the figures under the second column first. And the figure for the purchase is 95,420. You have 95,420. And you put in also motor vehicles as well. Motor vehicles is what? 16,594, right? 16,590. Am I correct? Yeah, man. So 16,594. 16,594. All right, this for motor vehicles. You add them together, and then you can either put the figure up here or you put it down there. It depends on what you want to do. Look at something based on our All right, so therefore, you add up these two figures now. You can put it figure, you can put the figure right if you want, but I normally put it right here. So I put it down here. So you add up those two. You have 95,420 plus 16,594. That would equal to 112,014. All right, that will be a total fixed assets. Good. Just stay right there for the time being. Consider that right now. Then now, for your current assets now, normally I put a little thing to separate them or differentiate them. The bullet this time. You can also underline them if you want for neatness. Same thing. Bold, underline. Now, our current assets are, we're to start with stock. In other places, you find it as inventory. Then you have debtors. Then you have cash at bank. Then you have cash in hand. All right. Now, the stock now, the stock would be will always be your closing stock, which in this case is $12,408. So remember, your stock will always be your closing stock. All right. Good. Which is $12,408 in this case. All right. So your stock will always be what? Closing stock, which is what? 12,408. In this case, 12,408. 12,408. And the debtors know. Go for it, debtors know. Debtors know. Debtors now is 26,740, right? 26,740. Then the cash at bank now, go for it now. Look for it. Cash at bank is like 16,519. And like cash on is 342, right? So 16,519 cash at bank. 16,519, 16,519. And then cash in hand is 342. Now, all of these now, put the amount down there. And that would be a total current assets, right? So we have 12,408 plus 26,740 plus 16,519 plus 342. And that will give you a total of 56,009. All right. Then now you're gonna have what? Less current liabilities. Please re-log in at the end of the few minutes, please, folks. All right. Please re-log in. All right, so please log in at the end of 10 minutes, all right? Now, you have only one current liability in this case, which are creditors, all right? You put creditors there, and look for your creditors amount in your question. In our question, creditors amount is how much? 16,524. 16,524. Should have 16,524. In this now you are subtracting. Sorry. In this case now you are subtracting, right? You are subtracting 16,524 from your current assets of 56,009, and your figure will go over here now. And that figure is called what? Working capital or net current assets. So 0.099 minus 16,524. That will be equal to 39,485. And this now will be added to the 112,140. So you now have 112,014 plus 39,485. That would be equal to 151,499. Now we're gonna put in something else. We have less long-term liability. In this case, there's none, but I'm just putting it there for to know what to do. All right. In this case, it is what? 0. So we in bracket 0. Draw a line, and then you will get your 151 minus 0 equal to 151,499. So that will give you your net assets. Right. The double line right there as well. So whatever you have here should be down the bottom section as well. All right. Now we're going to look at capital now. Capital. I'm going to call it finance by, but capital for now. And they have cash introduced. And the cash introduced would have been, let's go to it now. Would have been a capital of 138,066. All right. Again, 138,066. We copy and paste it and then, and put it right here. 138,066, good. Then now you add net profit, and the net profit would have been net profit from here, which is your net profit from here is 21,858. Right? 21,858. 21,000. 858. Add those two together. Put it over here so instead of all right, I don't know if they get this figure now. And that would be add up these two now. So now 138,066 plus 21,858. Put it over here. So 138,066. Yeah, add net profit to his 21,858. I'll give you 159,924. Then we list joins. For joins, no. Joins is 8,425. Joins is 8,425. Should have 8,425. We're subtracting joins now. See with balance. Double, single and double line right here. So you have 159 minus 8,425. So you have 159,924 minus 8,425, and you get 151,499. Therefore, the balance sheet is correct as can be. This is now called your total capital. And that's that for that, gentlemen folks. I'm going to zoom out so you can take a picture. Try to take a picture now, gentlemen folks. Take a snapshot, please, of this. That's how you do a balance sheet. Simple balance sheet. All right. Please you log in. So we'll continue to our next section. We're going to move to journals and ledgers next. We resume now, all right?
Sir,
Yes.
on a lunchtime yet?
No, sir. It's a madman. Of course, what eat to live, man.
Sir B, you published a 10 window recording. Trust that you had a good night's rest. Some of the students